What is going on, everyone? My name is Jeff, and so late last week, guys, Facebook reported earnings had a blowout quarter. So they ended up beating by 20 cents on EPS and then beating on revenue by $510 million, guys. And I think this kind of sent a shockwave through Wall Street. I don't think anybody was really anticipating this. Of course, you know, Facebook investors, which would be myself, I think most people were kind of expecting another slowdown type of quarter to be reported, and they absolutely knocked it out of the park. And so since they reported earnings the other day, guys, the stock has actually recovered close to $15 per share. And as we step closer and closer towards a full-on market recovery, you know, I think the price of Facebook will continue to trend up. So anyways, I sat down to do a full-on stock analysis video on Facebook, and I actually stopped. I scrapped that video and I started over from scratch because I have zeroed in on a metric and a ratio that absolutely blew me away, and I have cross-referenced this on every platform I have, and so far, guys, I have found it to check out on every level of my cross-referencing, okay? So again, keep in mind, I am well aware of all the good and the bad and in between of Facebook. You know, I say the good being the huge growth story that they've already accomplished, and I think, you know, the growth, the future that Facebook has as a company when you consider not just the Facebook itself, but all the other companies under their leadership, like Instagram and WhatsApp. You know, it's rock solid fundamentals, guys. Even though Facebook is a growth company, you know, you could also make an argument that it is also a extremely good value play. But I'm also aware of the negative side, okay? I'm aware of all the controversy surrounding this company. For example, the Cambridge Analytica scandal. You know, they've had multiple data breaches. It has been suggested that they were involved in rigging the 2016 election. And even on Friday, I seen another article come out where Apple banned Facebook from the App Store, and they're accusing Facebook of abusing their enterprise privileges, and they were apparently installing monitor software on teenagers' phones. So that story is still kind of in the works. And listen, being a Facebook investor, you know, you just have to have thick skin. This quite possibly might be the most controversial company that is publicly traded. I think the argument is there. And then of course, I know all the in between. I know the lousy year they had in 2018. You know, you can go back to when they IPO'd in 2012 and look to 2017, and guys, few companies would have been a better investment, okay? Year after year, Facebook just kept on growing and growing and growing. And like I said, in 2018, all it really did was disappoint. And so right here, guys, this is the 1 year chart on Facebook. And like I said, over the past year, they've actually lost 13% of value on their stock price, and that is after the big earnings beat last week, okay? So the stock has actually traded down as low as $124, and like I said, 2018 has been terrible for Facebook. But if you pull up the 5-year chart, like I said, it still would have been a great investment because over the past 5 years, it is still up 162%. But in this video, guys, I'm really going to focus in on one metric, and then I'm going to tell you why I think Facebook is a screaming buy, you know, after all the metrics were updated at quarterly earnings, okay? So guys, I've got Facebook's balance sheet pulled up right here. Now, this has been updated through their most current earnings report, and this cash to debt ratio absolutely blew my mind, okay? When you break it all down, for every $1 of debt Facebook has, they have $82 of cash, okay? That is an 82 to 1 ratio. And so now we're gonna go through a few companies that are in its space and kind of some of their main competitors, and then I'm just gonna line up and compare against the biggest companies in the world, okay? And you will see quickly what I'm talking about. But two things. First off, the survival of Facebook and the ability they have to grow, the amount of money they have, you know, can really be dictated by the amount of cash they have compared to the amount of debt they have, okay? You can basically say they have no debt if you want to, because $500 million of debt is just a drop in the bucket when they consider how much cash they have. It would be like you. If you had $500 $500 of debt, but you had $60,000 in your savings account, you know, you can go ahead and calculate in your mind that you just don't really have any debt. You can pay that $500 off pretty much anytime you want. Now, this isn't the only reason to buy Facebook, you know, and again, don't never buy a stock based on a YouTube video. Do your own research and make sure you're buying the stocks that you want, that you believe in, and that you're willing to invest in and stand by. But I think too, also, this puts Facebook in a much lower risk category than any other company, because if a recession was to happen or a big economic crash, guys, Facebook has plenty of cash on the balance sheet and hardly any debt. Guys, Facebook could basically survive anything with little to no problems, where some of the more debt heavy companies, you know, you could see them struggle. I don't anticipate a crash, and I don't anticipate a major recession. I think we're recovering right now, and I think here in the next few months, you know, the indexes will be back to making all-time highs. But if that was to happen, Facebook would survive no problem, okay? All right, so let's take Facebook and compare it to Twitter, okay? Now, these two companies are nowhere near the same size. You know, Facebook is much, much bigger and has been much, much more successful than Twitter, but they are kind of in the same sector, okay? It's both in the social media sector. And of course, Facebook has made a career out of kicking Twitter's butt on earnings time and time and time again. But just for reference and just for a quick check, there is a lot of analysts that would consider Twitter a good investment. I have a spreadsheet that I made out, and I'm going to take all these companies and we can kind of look at them together at the end of this video. All right, so this is Twitter's balance sheet, guys. So $5.96 billion of total cash and $2.71 billion of total debt. Now, even from any standard you want to look at, this is also a very healthy situation to be in, that they have nearly 2 to 1 of a cash to debt ratio. But when you compare that to Facebook, it's not even in the same ballpark. Facebook having an 82 to 1 ratio. So over here on the left, guys, this is Facebook, and on the right, that is Twitter's balance sheet, okay? As you can see, Twitter has $2.2 billion more of debt. Now, here's the problem I have with that, is they have about $36 billion less of total cash, okay? Now, guys, what I have pulled up here is the largest publicly traded companies by market cap, okay? And as you can see right now, Amazon currently is the biggest company in the world, but closely followed by Microsoft, Apple, and Google. You can see, you know, all 4 of these companies right here, guys, are really only about $20 billion apart from each other, where there was a much bigger gap, you know, earlier in 2018 when Apple and Amazon went well over $1 trillion market cap. And then after Google is Facebook, and then Alibaba, Johnson & Johnson, and Visa at the end there, okay? So now I'm gonna do one more company, guys, and that is Amazon, and then we will jump over to the spreadsheet and I can show you how Facebook compares to all of these companies. But now, again, on the left, that is Facebook's numbers, and on the right, this is Amazon. Amazon being the biggest market cap company in the entire world currently. So if you look at total cash, Amazon just barely has the edge in total cash. Where if you go down to total debt, look how much less debt Facebook has than Amazon. Amazon has roughly a 2 to 1 cash to debt ratio. And so even from that aspect, you know, even though Amazon has a much larger market cap, Facebook has it together financially a whole lot better when you look at it through this particular metric, okay? All right, guys, now listen, feel free to go back and cross-reference me. As a matter of fact, I would actually encourage it, because some of these calculations may be off a little bit, but I think I am pretty close. Like I said, some of these I rounded up or I rounded down if it was too close to worry about. Now I have the cash to debt ratio, you know, across the board, okay? And as you can see, nothing is even in Facebook's ballpark, and I have the biggest companies in the world pulled up. And I also included Netflix and Tesla in this category because those are 2 very big high growth stocks just as well. So Twitter has about a 2 to 1 cash to debt ratio, Amazon about a 2 to 1 cash debt ratio. Microsoft is close for 1 for 1. So about every $1 of cash Microsoft has, they have $1 of debt. Apple actually has more debt than they do cash. Okay, so for every dollar of cash Apple has, they have about $1.5 of debt. And that is still considered a strong fundamental. That is still not a ratio that I at all would worry about. Google has a lot of cash in comparison to debt. Of course, that is my favorite tech company. You know, being a YouTube creator and, you know, most of my entertainment coming from YouTube, and also Google being the dominant search engine and all the great services that Google has, this totally makes sense too. But even Google at a 27-to-1 ratio, guys, not even close to Facebook. Not even, like I said, not even half. Not even close to being half of the ratio that Facebook has. And then of course down here at the bottom you have Netflix. Netflix has about 3 times as much debt as they do cash, and pretty much the same thing with Tesla. For every $3 of debt, Tesla has $1 of cash. So again, this is not the only reason to buy a stock. There is a lot of other things to consider. But for the fundamentalist and for the people who kind of live and die by the metrics and the statistics, Facebook by far and none has more cash than debt, and I feel that puts them in a much safer category than any of these other stocks. Okay, the only one in my opinion that's close is Google. You know, do your homework, do your research, but I think Facebook stock is almost a must buy. It would be a good idea to try to get it into your portfolio on some level. Okay, now again, keep in mind, with buying Facebook stock comes a lot of controversy and a lot of negative news, and some days it feels like that's all you're gonna hear about Facebook. But when you boil it down and you get in the numbers and you look at the fundamentals, guys, there is very, very few companies really that are safer than Facebook when you weigh cash against debt. Okay, so anyways, guys, that's all I got for today's video. Drop me a comment, tell me what you think about this. Like I said, feel free to go back and cross-reference any of this stuff. Like I said, I did round up or down a little bit in each situation, but I'm generally close, you know, and on all these ratios. You know, let me know what you're thinking about Facebook since the last earnings report. I would love to hear your comments. Drop a like on this video, guys, and thank you so much for watching.